Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com. I want to welcome you to today's morning call, and more importantly, I want to welcome Chelsea Oliver to her first morning call.
Thank you so much. I'm very excited to be here. Thank you, Scott, for having me. Excited, so let's get right to it, shall we?
Just jump right in.
All right. So we have mixed markets around the world. Asia is tacking on more gains while Europe is still flattish. How are the overseas looking to you?
I think the overseas landscape is still intact. We've had these major rallies across the board for multiple weeks. So to wake up this morning and see the Nikkei up another %, to see the Hang Seng not give back much and the Shanghai up a little bit, pretty impressive. If you look at the chart here of the FXI, because we like to look at the technicals, you will see that for the first time in a while, the FXI, which has been below the 8 and the 21-day moving average, reclaimed it right here. So you have the FXI gapping up and holding the gap, and it's now been almost a month, and here you are extending. So you are up 3 days, so it's not saying it's overbought. There is some more room to this higher level, but ultimately when you're above the 8 and 21-day, there's more of a tailwind versus a headwind. And if we look here at the EWG, which is a proxy for Germany, you know what? It actually hasn't really gotten much, but it is also holding above the gap. It's now above the 8 and the 21-day. I think the next level for the EWG could be a little bit closer to 24.45, or at some point, maybe even get as high as 25.50. So overall, the landscape is looking short-term better, but we'll have to see where that goes.
Now, futures are flat as well. Are you anticipating the big jobs report to have an effect on this?
Well, I think that's probably why they're flattish, because we've had such a big move. And tomorrow that number, it's probably not as important as it has been, but anytime you have, Jobs Friday coming up after a move, there's a lot of people being tense because people don't want to be caught short, or they don't want to buy a top. So we have to figure out, how to navigate. And if you look here at the SPX, you will see that, we've had quite a move, and it's been very methodical, it's been very technical, and, lots of action. You had your low here at 1812, your double bottom. Here it is. Then you had your quick move to the upside. First time, it kind of couldn't get much traction above it and then pulled back. But then you had that red dog reversal around this 1902 spot. And then ever since then, we've been basically hovering and going up the 8-day. Every time we do get a bit extended from it, we are prone to some kind of pullback. And with major resistance coming right in front of it, I don't think you get massive long if we start taking out 2000. And there is a slight chance that today with the futures being flattish, we push through 1986, and then somewhere into there, if we do see some kind of topping tail reversal, definitely sell some longs and maybe even look for, some type of cute short.
Right, and recent sectors are on the move. How is the overall landscape looking to you? And I know you just mentioned the red dot reversal. Can you kind of elaborate on that? Are you looking for that?
Well, in other sectors as well, I would think so. We've had big moves in the S&P, and now, most sectors have had a lot of action, and they also extended gains. So, if we look just say at the Qs, that'll be the first one. So the Qs right there also had a really nice expansion bar here. So with that being said, you look at the 8-day moving average, you gapped up above it right here. Here is where the bulls made a stand, and now you're coming up. So, yesterday the futures were lower, and we wound up, heading up, and put a high in the Qs at 105.85. So if we push above this, and get to the 200-day, I think you could be a seller there. And then if we come back below it, perhaps maybe even short versus that level. We've talked about the Russell. The Russell, basically has had a really feisty move. This was your low. You had 4 up days. This is when I said, now we could look to see if there's commitment and opportunities. That was around 99. Posted this chart actually on Twitter saying if it gets above 102, we could see the 50-day. Well, we're above that. So a red dog reversal here would be as if we trade above this 106.09, squeeze some extra shorts, then come back below it. Then perhaps you get a bit of a topping tail where you could short against, with the moving average as well below. And then lastly, I just want to touch on, the XLE, because the XLE is where we found, some relative performance yesterday on that oil number. And this is when it broke above that 58.20, gave you a good spot. I do think at some point it could see higher levels closer to 61.8, but we'll see, short term how we handle it. But overall, things have been on the move, and I think everyone, Chelsea, should write down yesterday's pivot highs in every sector, because if we push above it and they get to squeeze and push back below it, there's your red dog reversal.
Right. And what about high beta technology? Looking into that today? Continued growth?
There might be.
Maybe.
You know, we saw a big move on Tuesday, and that's when you had them tight, and that's when you had them, you know, consolidating. And then yesterday, some pushed a little bit higher, some didn't. You know, I don't think it's that compelling. You know, you look here at Amazon. Amazon gave you that nice push above that pivot that we discussed. Here is your inside trading range, and boom, held in pretty well yesterday. Feels like it can continue. You know, make sure if you are long it that it holds above this spot. So this support is 573.70. Above this, maybe it continues a little bit more. Google yesterday was a little weaker than Amazon. You know, but it held where it had to. Not much power, but you know, we take what we can get. And right here, you do have a 733.25 as support. If it happens to take out yesterday's highs, maybe there's a little continuation. You know, if you go into Netflix also gave a big move and then was a little bit wishy-washy yesterday. This is the way Netflix has been trading, green day, red day. You know, here's when you had that reversal, took back the 200-day. I guess you could say it's still somewhat in line and could see a bit higher prices, but you know, it's choppy. And lastly, I just want to talk about Apple, because Apple, to me, you know, is acting a little bit better for itself. Okay, you had this, you know, this breakdown in Apple earlier or late last year when it broke this ascending channel, lost a 200-day. Finally, after doing a lot of work down here, you know, you had this break above this tight range, and you know what? It didn't fall apart for the first time. It actually held it. So I'll look for opportunities. I'm still long Apple from 2 days ago. If it could take out yesterday's high, maybe you get a quick move, you know, into the 101.50, 102 area, and then that's when I'll be taking some off. And you know, some think it could even get a little bit higher than that. So Apple's acting a little bit, you know, better, but you know, not a barn burner to say the least.
How is the social media sector holding up?
You know, I think day to day we get different types of trades amongst the three stocks within there. Right. You know, you have Facebook, which still is grinding higher. You know, not much going on there. Or there is a lot going on, but each day is a little bit different. You have this ascending channel to the upside, you know, which looks like, you know, it's hard to be sinking your teeth in up here based on the fact that we're almost back to where you had the red dog reversal here for that move lower. So I would take it easy there. You know, LinkedIn, also not really that compelling. It's come off those post-earnings lows, and I guess at some point, you know, market hangs in there. If it wants to trade into that earnings gap, here you go. But in order to do so, I would say make sure it holds this spot, so be long verse 114.22, and then maybe it pushes above that and has something to fill. You know, Twitter also, you know, is kind of you know, showing that it could have another move. It had that overthrow move after earnings, then your first wide range bar, and then we talked about can it hold 1711 going sideways and then flag to see a move a little bit north of 20 that could take it up to 22. And for that to happen, it's going to have to trade above this like 1875 with authority. I did buy a little bit of this yesterday, thinking that maybe with the relative strength it could get another push, but you know, I'm not expecting, you know, huge moves, but there could be something to do there, you know, today into tomorrow.
Now, metals. They've been consolidating for probably 3 weeks now, would you say?
About that.
What level does gold need to, you know, come in at in order for us to see higher prices there?
Well, I think, you know, it's come into that GLD's 115, and now the question is, where could it get above to get future gains? Right. You know, it's like 1250 for the metal. That's pretty much been resistance 1245 to 1250. So with that said, you know, I want to show you the pattern of the GLDs. It's been getting tighter. I know it's had a big move, and it did take out, you know, this 8 day has been going all the way up, and you know, we like to look at tight patterns. I'm in a little GLDs still. You know, it's been going and hovering above the 8 day. I think the level that Chelsea would like to see in order to get a little bit more gold in here with the metals is maybe 119.50 to 119.80. Here's your peak. You know, it's getting very tight, so we'll see. You know, gold had a lot of reasons to go down while the markets rallied, and it didn't. So maybe that's saying you go back to the weekly chart. You know, this little bull flag that you see and this commitment here perhaps could take it up to the 200-day, which is a little bit closer to 125. So I think you stay in some, even though you had a big move, and maybe there's a trade if that ignites, and who knows, maybe tomorrow's jobs report could serve that purpose.
That's all I have for you today. Do you have any closing thoughts?
You know, a lot of people are that if they brought their cash down, they're wondering, do I have to put new money to work? Especially probably a lot of funds out there that might have, reduced all their positions into the chaotic mayhem. So at this point, like, oh my goodness, all that performance anxiety comes back. Yesterday I posted a blog post. I want you to take a look at it, showing the tactical bull versus the potential intermediate bear. Because as we get higher, everyone gets all excited and everyone forgets some of the structural damage. But for today and recently, we've been in this trend to the upside. All the sectors are above the 8 and 21-day now. Some took back the 50-day, and now we'll see how they handle the 200-day if they get there. And for today, look at yesterday's pivot highs. If we push through and people get squeezed, we come back below, maybe that's your signal to reduce more risk. And with oscillators at plus 85, maybe you get that short signal to be in a little short for what could be a pullback. And then lastly, if we do have another week or so of gains and you were jumping out the window when we were at 1812 because you couldn't handle it and you thought your whole life savings was in the market and going away, that's when you sell some. Or you buy some cheap VIX as insurance because it's always a lot cheaper, before the hurricane hits, and who knows if there will be one, but when it's cheap, you might as well go out multiple months.
I think that's all we have for today. Thank you again for having me, and thank you everyone for tuning in. We'll see you tomorrow. Have a great trading day.